Hello, welcome back, and let's talk about the time frame choice and also what Forex pairs you should pick, because in this context it fits quite nicely. One size fits all doesn't work in trading, whether it is about the trading style or the way you approach trading, but it also applies to time frame choice in a significant way. As you have seen probably already in MetaTrader, you can choose between a variety of time frames. We start mostly from the monthly, the weekly, which most traders don't trade, the daily, the 4-hour, the 1-hour time frame. 1 hour is very famous. Then when we go to the lower time frames, we have the 30-minute, 15-minute, 5-minute, and even the 1 minute. And those are very, or the choices is the choice that you make for what time frame you want to follow has a lot of implications, and it will affect your whole trading. And you have to ask yourself first, what personality type are you? How do you work best? Or what is your skill set? What are your strengths? What are your weaknesses? So let me walk you through a few questions that you need to ask yourself to make the right choice when it comes to time frame choice. So are you a fast thinker? On the lower time frames, especially when we go below the 30-minute, 15-minute, especially 15 and 5-minute, you have to react quite fast. You cannot plan your trades the same way you can plan them on the 4-hour or the 1-hour or the daily time frame. You have to make decisions quite fast because you will get a lot of signals or potential signals in a day. Not all signals will lead to a trade. Sometimes you have an almost signal and you have to pass on it. And there are many actions and many decisions you have to make during the day. Or on the other hand, do you like the long-term strategic thinking? That's what I prefer, which is why I mostly trade the 4-hour time frame and the daily time frame, sometimes the 1 hour, but rarely. And if you like this way of trading, where on the weekends or at the end of the day, you have time to look at your charts, and you can really plan out what you're going to do the next day, because, for example, on the 4-hour time frame, you only get 6 new candlesticks in the day. So there's only so much that can happen during the day, and you have more time to plan everything. But this also has a downside, as we will see shortly. Another question you need to ask, are you emotionally stable? Many traders, they like to trade the lower time frames because they think they get more action and more profit potential, but they overlook the problem that the lower time frames have. And if you are not emotionally stable and you experience a loss, then it can quickly lead to this vicious cycle where one loss leads to the next, where it leads to bad decision making, maybe revenge trading, chasing price, entering bad trades. Because on the lower time frames you get many signals in a day. You will see many candles, many potential signals, as I said, and you need to shake off a loss quickly to move on to the next trade and follow the next trade objectively. If you are, on the other hand, not stable, and you easily get irritated if you have a losing trade, but then in a few hours or in a few moments the next trade is presenting to you, you have to shake off the previous event, whatever it was. Maybe you're even over optimistic if you have a winning trade, and those are the things that really interfere with your decision making. And if you're not emotionally stable, then the lower time frames might not be the best choice. Or at least you can be aware of that emotional stability has a big influence on the lower time frame, and you can integrate that in your decision making. How patient are you? On the higher time frames, sometimes you can go hours or even days sometimes without a trade, and that is normal, and you have to deal with that. Especially in the beginning, many traders make the mistake that they believe in order to be a trader you have to trade. That's not true. And the less you trade, the more selective you are usually, the better your trading will be. But on the higher time frames, things move slower and you have less signals. That's one thing as well you need to consider. And also, of course, what is your daily schedule like? How much time do you have? Do you have time to actively trade for a few hours, maybe a session? Then the lower time frames can be an option if you think that's where your strengths are. But on the other hand, if you are quite busy during the day, then squeezing in a few moments here and there to actively try to trade the lower time frames is probably not going to be the best fit for you. Consistency is key. This is very important in trading, whether it is about the trading system and the rules you follow, or it also comes down to the time frame choice. Many traders make the mistake that they jump from time frame to time frame. They don't have any consistency in their approach. One day they will trade the 15-minute, the next day they will be on the 4-hour, then the next day they try to scalp the 1 hour, the 1 minute time frame, and they're all over the place. And every time frame, as I said, requires a very different skill set. So if you trade the 5-minute one day, the next day you go to the 4-hour time frame, you will not really learn a lot about yourself as a trader, and you will also not be able to improve your trading skills, because every time you need to really restart from scratch. You need to adapt to the time frames. That's not a mindset or not a place where you want to be in. You want to be able to consistently, hard word, come to the same time frames every day, train yourself on those time frames so that you can actually become better. So my tip in the beginning, choose 2 time frames maximum. Even if you want, choose just 1 time frame that are reasonably close together. So for example, do you like to trade the 4-hour and the 1 hour? That's a good combination. It's also a good compromise between the very, very short time frames, 30-minute or 15-minute, and the very high time frame of the daily. 4-hour and 1 hour is a good combination. Or do you tend to go or to gravitate more toward the higher time frames? The 4-hour, the daily is a good combination. That's the one I trade mainly these days. Or do you like the lower time frames? Maybe 1 hour, 30-minute, or 30-minute, 15-minute. Those are good combinations. And then stick to them for at least a few months. Observe yourself. How do you like those time frames? And really pay attention to the time frames and yourself. How do you deal with certain things? Especially go back to the previous slide. Ask yourself those questions over and over again. Observe yourself, how you react to certain things, and then you can find out what type of trader you are, what works well for your personality. Improve and adapt. After a few months, you will see how you really like those time frames, if they really suit your skill set, and if they don't, make little improvements, make little adjustments to improve and adapt to the situation. And then, of course, the way we choose our time frames also influences the Forex pairs that we should or could be trading. There are 2 general distinctions. On the lower time frames, usually you focus on fewer markets and fewer Forex pairs because you will easily lose the oversight. If on the 5-minute time frame you get so many candles in a day, and then if you at the same time try to follow 5 or 10 Forex pairs, that will become very, very hard to manage, especially in the beginning. Stick to the majors is a very good point in the beginning, especially on the lower time frame. So if you trade the 30-minute or the 15-minute, even the 1-hour time frame, you can stick to the majors only. There are enough majors that you will still get plenty of trades a week. And again, more trades isn't better. Be selective and choose the trades. On the other time frames, on the higher time frames, on the other hand, you generally follow more Forex pairs, because on the 4-hour time frame, for example, you only get 6 new candles in a day. You only get roughly 30 candles in a week. That's what you get on a 1-hour time frame in a day. So the market or the Forex pairs will not generate as many signals on a 4-hour time frame on any one pair. So you have to be you have to follow more pairs, but you have more time. As I said, also you can take the time in the evening or on the weekends to really plan your trades and really analyze the markets. We will come later to a lesson where I talk about market selection, which is very important, and especially for the higher time frames, it's a very important topic. So if you follow the higher time frames, 4-hour and higher, then I would recommend at least follow all the majors and follow most of the minors. The exotics in the beginning maybe not so much, but you can follow a wide variety. And then what it allows you to do is you can be very, very picky. You can only take the best trades. If you think that this trade is not perfect, then skip it. You have enough other Forex pairs in the majors and the minors that you can really choose and really, really be selective. And with those principles and guidelines, you can already start shaping your trading a little bit. In the next modules, we will talk then about actual price analysis, how to read charts, how to time trades, how to enter trades, and what tools to use.